Why don't we start off with just how you're seeing the market? So yesterday we obviously had earnings, very strong results from ServiceNow, IBM. The results were strong, but a lot of investors responding to the thought that the government cuts may impact their business. How are you viewing tech right now?
Tech looks a little attractive off the highs, but you got a lot of uncertainty here. Mag 7 hasn't really performed this year. You got to go out to international to get any kind of performance in the market. But you've had some good years, right? You've had some mega years out of those stocks. So if you're a long-term investor and you're looking at technology, you probably are bullish here. You're going to pick up some discounts.
All right, so when you say pick up some discounts, it sounds like you're saying, the phrase, quote unquote, buy the dip. But aren't there some big differences when it comes to tech, whether you're talking software, cybersecurity, the hyperscalers, for example, Alphabet reporting later today? So would you buy that stock ahead of earnings? Are you feeling that confident?
I'm not a fan of buying anything ahead of earnings. You never know which way it's going to go. But again, long enough of a time frame for an investor, you're going to look at 10, 20, even more percent of a discount and say, hey, is this something I want to hold for the long term? And you might actually appreciate that a very long time from now.
What do you make of some of those comments from Citadel CEO Ken Griffin saying that the brand of U.S. Treasuries could potentially be damaged by some of this trade policy? How are you looking at the bond market right now? When you're looking at bonds, if you are at all for your clients, are you looking at Treasuries? Are you looking at corporates? Where are you seeing the opportunities?
Usually I'm looking at the Barclays aggregate U.S. bonds as a whole when it comes to our volatility dampener in our portfolio. We're still getting some decent yields relative to where we were when we had zero interest rate policy. I don't think Ken's wrong. You know, what we're seeing here, the indecision out of Washington, the 10-year Treasury whipping around here, the bond market is clearly screaming something, and it's not good. So Ken's not too wrong here. We could use more communication. We could use some more certainty, of course, to understand what the game plan here. Right now, investors are kind of white-knuckling volatility, and that's never fun, but they're hanging in.
They're definitely hanging in. Earnings season so far, we've seen obviously some mixed results, but some positive outlooks out there. In your mind, how does earnings season continue to influence this market? Is it simply just trade policy, tariffs, or is there some other impact that we could see from earnings that could move the direction up possibly or even lower?
Yeah, earnings are going to be important to see where we were before all of, this trade and tariff stuff has come into play here. But as far as forward-looking guidance, I mean, can you imagine being a CFO or a CEO in this environment and trying to figure out how you're going to spend your capital over the next year or several years? It has to be impossible. It has to be super frustrating. And that frustration is showing up in the form of volatility and in the form of investors not really knowing where to put their next dollar. But again, long-term buy and hold investors, dollar cost averaging into this market is exactly what this is designed for. So you kind of got to go steady as we go here.
What about cryptocurrency? You've come in, we talked about it before. It's back above 90,000, but it's certainly been volatile. Basically, just as volatile as the stock market right now. Has the last couple weeks, has that changed your view on cryptocurrency or Bitcoin at all? Is it a hedge for the volatility or an option outside of equities?
I think that's one of the more compelling stories right now as you look at specifically Bitcoin decoupling from that leverage risk on asset that it's been for pretty much ever. And now it's doing the thing that it's supposed to be doing. Now, granted, very short period of time in which we see this decoupling taking place. But yeah, Bitcoin, coming down from $93,000 into that $91,000 range, but, well off its lows. I would keep your eye on Bitcoin, particularly will it indeed become that hedge or that decoupled asset from the NASDAQ or the markets in general.